them to you.
Yeah, please do send them to me.
Yeah, I would like that as well.
Oh, we're live now.
Well, we were just talking about Celsius. Tevis is having a culture of cracking a Celsius before the SoFi weeklies. We hope it continues. The shareholders hope it continues. Are you a shareholder?
I know. I only own Leaps.
Gotcha.
You get any dividends paid yet?
No.
So, ladies and gentlemen, welcome to the SoFi Weekly. We have 3 amazing guests this week that unfortunately last minute actually had to cancel. So we got Tevis, Roy, and Steve to pop in for those 3 guests instead. So unfortunately, you guys won't be able to know those names. How you guys doing?
Good. Very good.
You guys don't look happy about that joke at all.
Well, I'd like PayPal to go down, but
Let's talk about it. Why would you want such a thing?
Because Stevie is stupid.
Okay. Should have let your wife do it.
She doesn't mess with options. Do not pull a Steve and cover calls on Thursday when PayPal decides to go up by 6% the next day. Not good.
Yeah. And what are you gonna do whenever Nvidia hits 600? Are you gonna have like a brain aneurysm or something?
No, I don't care.
Because you were pretty confident that wasn't gonna happen.
And I think it looks cheap now.
I'm happy. So as the title says, I wanted to talk about this with you guys. Maybe put a smile on Steve's face. SoFi actually introduced a new product. They actually had this product previously, but I don't think it was integrated within the app. Here, bear with me a second. I can bring it up on screen. It was the SoFi business financing marketplace that they created to connect other business lenders with, business account borrowers. Only problem is SoFi doesn't have any business accounts to offer these loans to. So they're just offering them to potential individual members that might potentially have a loan a business on the other end. I think that this is the beginning of many more products to come, because if you're going to be putting out lending products for businesses, you might want to have the clientele to sell it to. And knowing what they've recently done, getting rid of cryptocurrencies, these sorts of things, to allow regulators to potentially move forward with a new segment, this could be it, guys. Roy, what do you think about this?
Yeah, I think this is exactly what we were talking about last week. And I think Steven just called up Noto and said, hey, this needs to get done. Just do something. Get your foot in the door. And yes, they're not originating these loans. It's as far as actual revenue, it's like, yeah, it's whatever. But it's their first significant announcement that's related to business. Would love if it was business accounts, but it's okay that they start here. And if nothing else, what it does is they're going to get a whole list of people that are that have businesses and are interested in SoFi products, so that later, when they do announce business accounts, they'll be like, okay, we don't have to like randomly advertise and hope it works out. They have a list right there. They can hit the ground running. So this is magnificent. And I think you're exactly right. It's the first of many things to come. Business accounts, hopefully next.
Are there any business account integrations with Relay at all, tracking business account balances or things like this? Because that I'd be interested in, because it would be another way for them to source which of their clients actually potentially have small businesses that they're running with.
That I can't say for sure, but I think that is correct. I do remember vaguely something like that. I'd have to look that up.
Right. Okay. Anything else that we saw this week? It was a very quiet week. That's why we're going to be talking some PayPal, because they actually have had some pretty interesting news. But anything from your end, Tevis? I didn't see a Friday episode.
I just didn't post it on Twitter. The only other 2 pieces of news, it was really soft news week. The only other 2 pieces of news that I highlighted was the Bright Health IPO that SoFi was going to be doing. which I mean, I feel like we've beaten that horse to death with Instacart and ARM and others in terms of sharing our thoughts around SoFi participating in the IPO market or allowing their members to do so through their Invest app. And then the third piece of news was our boy at Mizuho lowering the price target to $12 from $15. And I think Dan Dolev or somebody commented, I think Ori commented saying I was pronouncing it wrong. I'm just going to continue saying Dolev until I know better. I mean, he was one of our most bullish analysts, and similar to the KBW analysts, whose name I forget right now, they basically changed their price targets without any new fundamental news changes.
I think it was Michael Pareto, by the way.
Michael Pareto, yeah. And that this is the thing that I fundamentally disagree with. I'm not against, somebody bullish going from 15 to 12 or somebody going from, 750 to 650 or whatever. I just disagree with the fact that there's no fundamental basis. There's no company action that justified that move. And especially this time around where it's like 2 weeks before earnings, you're going to get updates in terms of their financial results. You're going to get updates in terms of their full year forecast guidance. I don't understand why you would change something just when you're in a position to set yourself up so that in 2 weeks you're going to have to change it again because your models so-called are going to be outdated at that point. So not a huge piece of news, just a little bit discouraging, I think, from a bullish sentiment perspective, especially because this one, Dan Dolev at Mizuho, was one of the sort of more bullish analysts at SoFi.
Well, and likewise, Dolev downgraded SoFi, or not SoFi, downgraded PayPal literally right before their big announcement. So, I had not read the whole report. I had somebody that mentioned that they would let me take a peek at it, but what I read of it is it's the same thing. It's all stuff that's been gone over. He was one of the most bullish on PayPal. He's also bullish on Hood. I've not seen him downgrade Robinhood yet. Maybe I missed it, but I don't think so. And it could just be that he's just souring on where the market's going and wants to lower those price targets. But I think it's silly as well. Like, unless you have a substantive reason, just wait until earnings. They're going to give full year guidance. They're going to let you know what's up. And based on that, you can say, okay, we're going to raise lower. It makes just a lot of sense. It's in 2 weeks.
Right. Yeah, no, I think Dan Dolev said that his long-term price target for SoFi, like he could see it hitting $50 a share or something like this. So playing around with the short-term figures is, that's fair if he doesn't believe that the macro in 2024 will be positive in SoFi's case. But I don't think that his overall view on SoFi has changed. I think that's merely a price target. But that's just going back to whenever he was on, what was it, CNBC, I think, and he was doing a top 5 financial services companies in order. I think SoFi was number 3 behind Robinhood, and then Affirm at number 1.
Yeah.
But yeah. Let's move on really quick to PayPal, because this is just a little bit more exciting for the week. PayPal announced that they'll be doing a live event on YouTube January 25th. They are going to be talking about all of their newest innovations for PayPal and Venmo. And Alex Chris said he's going to wait. Let's see. I think this is the quote here. 25 years ago, at the dawn of the internet, PayPal was created and e-commerce was born. Fast forward through decades of innovation and unimaginable growth, PayPal is leading the way to provide safe, secure experiences to consumers around the world. I invite you to join us on January 25th to hear about the next chapter of PayPal and how we're going to revolutionize commerce again through AI-driven personalization for both consumers and merchants. That's not actually the quote that I thought it was going to be. He said that he was going to blow away the world, or he's going to, take the world by storm. So very, very enthusiastic about this thing. AI-driven personalization for consumers and merchants sounds interesting. Roy, what do you think?
Well, just to back up, so the announcement came out one day. The next day, he was on CNBC, and that's where he said, "We will shock the world." The context of that, this is the first step in that, the first look on January 25th. So this is not a, and some people misread that, I think. But if you hear, basically the CNBC guy said, "Hey, all these analysts are downgrading you. What do you think about that?" And he's like, "Well, we're going to surprise some people. We're going to shock the world." And they said, "Okay, well, how are you going to do that?" And so he laid out a series of things, but the first thing he said was that first look. So and I think it's named very aptly. It's the first look of the new PayPal. It's the idea of like the streamlined, everything is succinct and working well together. Versus in the past, execution was not, and efficiency were not top priorities at PayPal, I would say. They didn't do it particularly well. And so Alex Chris has been talking about, by the way, some people came away from this and they thought this is just the buzzwords, it's meaningless, doesn't mean a whole lot. I've researched Alex Chris a lot before I initiated the big part of my position. And he was talking about AI, back in 2017, 2018, vociferously, machine learning and all of that as well. Knows small businesses very well. So this is not hey, let's just get the stock to go up a little bit because analysts are jerks and we want to stop the series of downgrades, because 4 straight downgrades already this year. But there's going to be some substance. I don't know what this is. He talked about conversion rates. Mentioned that a couple of times. He talked about, interestingly, which took me by a curve. Was a curveball for me. Talked about advertising and the cost of advertising for small businesses. I don't know that relates at all, but whatever AI product they are likely to submit is something that's going to work on conversion rates. So when a consumer comes and looks at the web page and they're just browsing around, merchants want that to land in sales, and usually that's just their responsibility. Adyen has taken some steps to try to help conversion rates on their end, and so This is, I think, adding to the value proposition of PayPal. So if they're able to help those that actually use PayPal branded to lead to more conversions, which, by the way, in the past with PayPal, they talked about conversion rates with PayPal, and it was true. They had good conversion rates just because people recognize PayPal, they feel safe using that. This is something more. And so if they're able to accelerate those conversion rates, bring meaningful value add there, it means more revenues are coming in, but also the value proposition of branded is much more significant. And so that begins to grow, and in turn, those margins that they need to inflect will begin to inflect. It's not going to be overnight. It's not going to be quick. He said that this is a transition year as they implement these things.
Yeah, well, I think just with him being so new at PayPal, it's really difficult for myself or everybody, watching the wider market in general to baseline their expectations on an event such as this one. Because so for example, I've been a Tesla shareholder for years, and they have these events, Investor Day, Battery Day, AI Day, so on and so forth. They're all cool, like from a science perspective, but they always are like a flop because people's expectations get ahead of themselves, and they're expecting this mega announcement, which never really comes. It's just them reiterating whatever their mission statement is and how they're going to get there, essentially. And so when I saw this, I thought to myself, well, it could go that route where it could be a totally normal, hey, we're actually layering in AI onto PayPal. We're going to be streamlining it. We're going to be having these strategies. And it's all long dated, non-committal, like generic stuff that they're doing to increase operational efficiencies, that people might be expecting some big announcement and not get it. Or it could be like, hey, we're buying Pinterest again, or like anything in between. I need like that. Anything in between, simply because I don't know the type of CEO who I'm dealing with. He's never done these types of events before. And this is just like, we don't have any prior information to help us guide what to expect for this new event.
Yeah, it definitely could be. And I've, as a Palantir shareholder, I've seen the same thing with the is it double click days back in the, it's been a while. But yeah, you're right. A lot of these end up in flops. I think there's some meat on the bones here. One of the reasons why is if you go back to August, John Kim doesn't have many interviews or discussions very often, but he said, we're working on 3 AI products of note. One was on fraud detection. One was on like some autofill stuff. It's like no big deal. And then he mentioned a third one, which he said nothing about. And he said the timetable to implement these is 120 days. If you count, it's like we're here. So these are not products that are Alex Chris necessarily. I'm sure that he maybe sped things up or tweaked some things here, but it's John Kim, who's been there since September
It's the
of
chief product
2022. Chief product officer, yeah. Yeah, I think he was CTO and then he changed to CPO.
I think that the difference between this day that's coming up and the Tesla day is that optimism was at an all-time high for Tesla's investor days, and PayPal is the complete opposite. It's full pessimism. It's all, and on retail, like through X, it can seem like there's a lot of people voting on PayPal, but the truth is, look at the stock. Look at the valuations on this company. To bet bullish on PayPal is not the consensus vote right now. And I think very similarly with Adyen came out, they didn't come out with a crazy investor day or anything along these lines. They said, hey, everything's still on track. We're just doing business as normal, but this is how we're doing things. And this is what we see in payments going into the future. The stock ran up 35% on that day. So I do think that that sort of greed and fear scale can put a lot of the pressure on those companies to perform during those days. I don't necessarily think that PayPal has to say a lot for them to be sounding pretty optimistic. They can just say, hey, by the way, guys, we're still in the game. And people are like, wow, okay, yeah, good stuff. Like, because that's what people are expecting. They're expecting a die-off.
And the other thing is, I would say Chris tends to not quite be as detailed as Schulman, but he doesn't embrace the hyperbole quite as much either. So we're the best in this, and he just kind of tells it how it is. But it's not all vagaries. Like it just, in his previous communication, unless he's a night and day different person coming over from Intuit, there's going to be some specifics, some concrete details. I think most of that's going to be quarter 4 earnings, which is 2 weeks following. So it's kind of a double whammy. You got one January 25th, and then the follow up, and I'm sure that they'll allude to some things. But yeah, as far as what this actual product is, honestly, I don't have the foggiest. I just know it's something with conversion rates and AI. So we'll see.
Yeah. Anything else on that big PayPal day?
I mean, so alluding to what Tevis was saying, it being a flop, if PayPal, like the stock, so talking about the stock, not the company, it's gone up a lot. It's the first stretch of 3 green days, like in a long time. And it's the best winning streak that they've had in more than a year. It's ridiculous. So just on an announcement, and a lot of that is the narrative, it's shifted a little bit, and people are excited. That's great. If that continues, if we have building up to January 25th, another 6% day and then 2% and 3%, it could very easily be a sell the news event. Don't get discouraged as a PayPal investor. I mean, what's the worst that can happen? We get back to the 60s, low 60s or of high 50s. I don't know. I will say one thing though. This event, I felt like there was going to be a relentless series of downgrades because retail investors are impatient, but analysts can be quite impatient. And so Alex Chris came on. The only appearance that he had prior to this was the quarter 3 earnings. Phenomenally executed, done very, very well as far as the presentation itself. But we just needed to see more of Chris. And I think part of this rise is just, okay, the CEO is actually, he exists. He's been very busy. If you look on LinkedIn, if you look on some different things that people have said, flying all over the place, and just he's had a lot to do. But I'm really hoping that this is the beginning of a few more appearances. He doesn't have to show up every single week on CNBC, but a couple of times a quarter would be really good, especially when you have a communicator like Alex Chris. He does a great job in front of the camera with questions, exudes confidence and competency. So I love this as an investor. That was, I think, the only thing that I was really a little bit frustrated about was that Chris had not shown up at all. And so it's a great thing.
Sure. Yeah. I'm surprised they haven't done any firesides.
He had not done any firesides. The other thing that Brad Freeman noted, and I came away with this as well. And if you guys watched the CNBC announcement, there were some allusions to cost cutting, to right sizing expenses. Did you guys listen to that? And if so, what do you think that he's alluding to there?
Yeah, hopefully we get rid of some of these smaller companies that aren't really a part of the bigger picture. We acquired like crazy, and I appreciate him bringing that up again, because I think whenever he got in originally, people were worried about really large M&A, and he said, no, actually, we want to right size our expenses, get back to the core product, and there's a lot of bloat. And
Yeah,
I think
the answer is layoffs.
I think it's a good chunk of it. Yeah.
Like every other company is doing layoffs in January.
Yeah.
It's not that big of a stretch.
Steve, what has to go wrong here in this investment for the valuation to not make any sense anymore?
Them generate less earnings and less free cash flow.
But to what degree do you think? Because, like, is there a margin of safety in this investment right now?
There's never a margin of safety. Any company can go to zero. Like, let's be real. Any company can go to zero. The difference right now is PayPal is trading at such a crazy valuation that I don't know how much more of a margin of safety you can get on this.
Can I share your screen?
Yeah, share it. I mean, you're talking about a company that's currently trading at basically 13 times what is expected for 2023 earnings, 12 times this year's earnings, and 10.5 times next year's earnings. I mean, this is crazy. You got 24% EPS growth over the next 2 years. When you look at free cash flow, they've consistently said that this year is going to be $5 billion. So if you're using $5 billion, and we'll find out in 2 weeks, they're trading at 14 times their free cash flow. I mean, that's cheap. That's very, very cheap. And let's not forget, PayPal's revenue has been growing. Dead companies don't grow. So I think everybody's looking into this, that Apple Pay is going to put PayPal out of business. And that's the biggest downside that I can see at the moment. Like, why else would people be scared of this stock? If they make too much money? I mean, relative to the amount of shares that they have, like, I
Are
don't get
margins
it.
still falling every quarter?
What margin?
Net aren't. The gross transaction margins are. The rate of the fall is decreasing substantially, and it won't invert quarter four. They keep saying it'll invert. Chris
You don't
is a
think
new
it's going to
guy.
invert in quarter four?
No, they specifically said that.
Why?
Like, if they did, that would be the shock of all shocks. The stock would absolutely rocket, because that is what analysts, that's what most people are focused on, hyper focused on. In fact, like if they post a triple beat and they have really amazing guidance and all these things that are happening, and even users grow. Users are not expected to grow this quarter either.
I don't think so.
Guiding for that in 2024. But if it happens quarter four, that's amazing. And yeah, the stock's going to do
Just
very, very well.
remember, even if margins do slip a little bit, if transactional volume increases and more than offsets that just means that they're going to generate more money. So you got to look at all sides of the equation. You can't just go with, margins are decreasing. You got to look at both sides of it. I mean, PayPal is continually growing. They're continually buying back shares. Maybe they're going to become a little bit more fiscally responsible. And look, I think the 25th is more important than earnings at this point.
It is.
We need to see what they say, because investing is not a short-term gain. PayPal has more than enough firepower in their profitability and their balance sheet that they could take the next year to restructure. And while that would suck for shareholders, from a long-term perspective, it could be the best thing possible. I mean, we got to see what happens on the 25th and with earnings, but these valuations don't make sense. And the analysts are looking at $6.16 for 2025 EPS. Let me see how many analysts that is. Hold on. 29. That's 29 analysts are projecting that. It's not like it dropped to 3 analysts. And 44 analysts are projecting $5.55 for EPS for 2024.
And just so everyone's clear, operating margins are improving. right? It's why mainly EPS is growing faster than revenue. And that's all great, but you can only grow it as fast as, transactional margins. And so if that continues to decrease, people sort of see the end of an expansion era for PayPal, where if they can turn that around and go back to expanding on transactional margins, then the sky's the limit for operational margins. And that's the exciting part, that they can cut costs maybe in certain areas. Sales and marketing, they've been slashing like crazy, but still there's so many other aspects to that. If they can do both, then we're in a really clear environment.
So real quick, Tevis, dead companies don't grow. I mean, since 2014, you've had year-over-year revenue growth. Like, the bear case doesn't make sense because we've been hearing the same thing. And I just see them generating more revenue and being a profit machine. And when you look at the balance sheet, this is a company with $11.5 billion in on-hand cash. You got long-term investments of almost $4 billion. And when you go to debt, $10.6 billion. They could write a check tomorrow and still have more cash on hand. Like, this is a negative net debt company. There's no leverage. Like, from a financial standpoint, this bear case does not make sense. It's all predicated on Apple and other companies eating PayPal's lunch. And quite frankly, there's no evidence of that.
And you have a good point on the valuation that, we've risen now from the low over 30%. And people, I have a feeling that when and if PayPal hits 70, there's going to be people saying it's overvalued just because of the run up. It's because it's run from 50 to 70. That's a really good run. Maybe RSI needs to take a cool down. Just depends on what happens. But it's not at that point. In fact, the company continues to improve. And I was buying this stock when it was in 70s. I was buying it when it was in the 60s. I bought it all the way down, average down hard. I got my average just around 55, thankfully. So, but no, it's in the 70s. To me, it's still undervalued significantly. It has a ways to run. But the biggest thing is that the narrative has always been, okay, the margin point, we talked about that. And then the lack of innovation, which they've been reliant on mergers and acquisition for a while. The question is, can PayPal innovate, or is it a dinosaur that's going to eventually go extinct? Very slowly, but eventually. This hopefully will answer that question. Now they have to execute on it. An announcement is certainly not enough, but this does shift the narrative somewhat, and it certainly attacks one of those bear cases. And the funnest thing for me, do you guys know the Michael Jordan "and I took it personally" or "I took that personally" meme? So I posted that with Alex Chris. Like, I was like, hey, this reminds me of him on that. He liked that. I think that he has a little bit of dog in him, where he likes winning. He loves executing. He loves leading. He doesn't love naysayers.
There's no executive who would be at that level who doesn't have a little bit of dog in them.
I think he has a lot more than a little, but we'll see.
Well, so here's the thing, right? At a high level, anybody who's been in the markets for more than a year knows that in the short term, once that market psychology turns on you, there is no good thing that you can do to flip that narrative. But once that narrative is flipped and the wind is at your sails a little bit, then it really turns around in a very fast manner, right? And so I think that if the 25th goes well, if earnings goes well, and if Chris says the right things that the market wants to hear, okay, margins are going to go up, we're going to be streamlining, we're going to be doubling down on their profit center, so on and so forth, that can really start a sustained move upwards and buck that trend that we've been seeing for PayPal, because it seems as though nothing else possibly can.
Can you share my screen, please?
Sure.
Thank you. So at what point does this look expensive? So let's look at this versus Visa and Mastercard. Okay. So I don't know what other companies to really evaluate them against, to be honest with you. Right now, without me changing the share price, this looks completely undervalued, considering Visa's trading at 27 times and Mastercard's trading at 36 times this year's earnings. PayPal at 100. Okay. Does that look expensive?
Right.
No.
That's including forward, their 2024 forward, revenue, or net income, and 2025 expected though.
This is their expected EPS. I'm just changing what if the share price was $100 today, it would trade in 18 forward PE for this year's earnings,
Yeah.
based on what 44 analysts are calling for. I mean, even at 120, let's see what that does. 120, it still doesn't even look expensive. At 22 times 2024 earnings. I mean, that's not a crazy valuation for a company that's still growing, that has that balance sheet and that level of profitability. I mean, do I think it's going to get there? I have no clue, but certainly doesn't look like a crazy valuation. If you say 250, that looks like a crazy valuation for PayPal. I don't think anybody's expecting that, but 100 doesn't look that crazy. And it's just the numbers don't make sense. And unless one of these companies starts really chipping away and PayPal has decreasing revenue, I don't see how they're eventually not going to catch a bid or get acquired.
There's some conversation in the chat that I think is a little bit misunderstood. So people are talking about how Visa and Mastercard are available on Amazon, the largest online retailer, but PayPal isn't. But that's not how stocks work. You're not buying based on which company has the largest market cap.
Right.
You're buying companies based on where they're going to change from where you're buying them. So the fact that PayPal doesn't have Amazon, it's not like we used to have Amazon and then lost them. People are even stating that. That's not even true. We had them for Venmo, which was probably a decimal of a percentage of the amount of transaction volume was flowing through Venmo's Amazon relationship. So we never had them.
I'm going to go.
If anything, that's an opportunity for growth if that partnership is ever made, not the other way around.
Every investment, you're putting up your capital and you're becoming a shareholder and you're paying the current market price for all that company's future revenue and cash flow that they generate. You're paying for a cash printing machine. Now, there are obviously other market dynamics, but you are an owner in a company. And the number one thing that you should be concerned about is if this company is going to be profitable, if this company is going to increase profitability, what they do with the retained earnings, their leverage position. The whole thing, oh, they're on Amazon, doesn't matter. Doesn't matter. You need to look at financials.
What do you guys think about X payments?
Well, that's the third part of the bear case. We talked about margins for PayPal. We talked about innovation and then competition. So according to some, at least on X, X payments is going to make it so that PayPal no longer exists. SoFi also apparently is going out of business. Probably all banks. Visa and Mastercard, they better watch out. That's all I'm saying.
Maybe, Roy, you can provide the context around X payments and just the recent news.
Yeah, so it's an ironic twist. I believe initially Elon Musk had a company called X that was bought out by PayPal. And of course, he was one of the PayPal mafia. And now he's getting back into payments through buying Twitter, calling it X, and then turning it into a payments platform.
I'm pretty sure they merged with PayPal.
Merged, thank you. Yes, that's correct. My biggest issue, so we don't know for sure what this is. It's been pretty vague as far as what they're able to do. They have applied for a lot of different state licenses to be able to do this and operate this. It looks like they're actually going forward. The biggest thing in payments is actually trust. That's why PayPal over the years has done quite well, is because it's a name that people respect and trust. They know it's there for the consumer. And if you look anywhere in the world, now I know that we probably all like Elon quite a bit. I really like him. I respect him. Don't love everything he does, but just an amazing guy. If you look at the world doesn't always agree with that. There's a lot of people who aren't just ambivalent to Elon. They hate Elon. They think he's horrible. They don't trust him at all. If somebody owns a company that does payments and you're like, I wouldn't trust this person with anything, you're not going to sign up and use them for payments ever. I have a cousin that loves EVs. He's into that. I think they're really cool as well. I plan to get a Tesla as my next vehicle. He will not get a Tesla. The reason why? Elon Musk. There's people that feel that way. The other thing too, well, I'll let you guys chime in, but I think there's a lot of reasons why this is not going to be much of a dent in any of our payment companies. It's not going to kill SoFi. It might impact Venmo very, very slightly. I even doubt that, but we'll have to see.
Well, I think one of the factors to consider is that we don't even know how the payments side of X will be used for. And in terms of the ideological beliefs or having a mismatch between like the person and the company, I would say at different levels with different products, because for X, for example, it's free to use. Anybody can use it. It's a pretty low barrier, to entry product. It would be different to boycott one product over another, depending on what the alternatives are in the market. And the fact of the matter is that X payments could just be used as a financial backbone for X, right? For content creators to receive donations, for
replacing Stripe in that instance, right?
Exactly, right? It's not necessarily that X is going to be creating an app that's like Venmo, or I know he's hinted at this, at saying, okay, this is going to be sort of the everything app, similar to how the Chinese apps are, but I think that's still a long ways away. And at the end of the day, they need to have a landing pad of how they're going to launch this new product into the market and what is going to be the core purpose of this new product when it first launches, and then eventually expanding the use cases from there.
How about what it's going to take for businesses that currently have a large portion of the revenue coming in already set up through PayPal? What's the incentive for them to leave to utilize X payments? I mean, that's the other thing.
I cannot believe, honestly, I love Elon Musk. I love all the companies that he's a part of. I think the Boring Company is exciting. I think Neuralink's exciting. I think Tesla's exciting. I think SpaceX is exciting. The list goes on and on. I have zero hype around X payments at all. It's like, I cannot believe that people think that this is going to replace payments. There's not been a single thing of what they're planning on doing. A single thing.
Look, he's betting on his
unbelievable.
popularity.
What?
He's betting on his popularity at this point.
Sure. But I think
I
Roy
just
brought up
saw
a great.
there was an article that he raised $500 million with $1 billion goal for his new AI company.
Dude,
did you guys see that?
I'm not anti Elon. I think that he's an amazing CEO, maybe the best businessman that we've had in terms of an entrepreneur in America. But what I'm saying is, one, the smaller down the rung you get, the less important it's going to be for him. I definitely don't think that X payments is high on his list. What was I going to say? Roy brought up a great
Tesla
thing talking about how
curious. How about that?
Sure. But Roy brought up a great example talking about MetaPay, right? The Facebook thing. Was that you, Roy? They have the most amount of users. Came out with this whole payment system. You can load cards on it, everything like this. Microsoft does it too. They get no one. No one uses this crap because there's already solutions that do way more because they're already focused on this problem, and they don't need to convert over to a new platform just to get the exact same thing that they're currently getting. So a problem is there are network effects to the likes of PayPal, to the likes of Venmo, to the likes of Cash App, and these sorts of places that I don't see people switching to one singular social network payment system so then they can pay only people that are on those apps.
So, yeah, I agree with that. But I do think that there will be adoption for this payment platform simply because, first of all, I don't think that any one new entrant in this space is going to disrupt PayPal to that degree where it's like a company ending bear case. I think that all of the actual legitimate bear cases for PayPal are PayPal itself, like their own numbers, their own company direction, their own growth story, their own brand, especially with young people. So I don't think that, like, I don't subscribe to that idea that, oh, X is going to come out with payments or Meta payments or whatever, and they're going to crush PayPal. But I do think that there is something to be said around the switching costs or lack thereof. For me, for example, I'll use PayPal for, here in Canada, for example, we don't have a lot of the, the Venmos and the, what's the other one?
Cash out.
Cash apps that you guys do. And so PayPal is really the only option, and I'll use it because it's the only option. But for example, if I'm a content creator on X and people want to, give a donation on X and I can use X Pay to withdraw that, that's easier for me as a user experience for it to use. I don't necessarily have any loyalties to PayPal to say, oh, let me actually go above and beyond and do these extra 3 steps so that I can use PayPal over X Pay. I don't care. If it's easier for me to use from a user experience perspective, and if it's convenient for me to use, they're all interchangeable at the end of the day, right? If the fees are the same, then the user experience is the only method by which they will differentiate themselves.
Sure. Yep. No, I agree. I think it'll be hard to have a new entrant into this place that's going to in any way replace a company that's doing 25% of the e-commerce spend in the world annually.
And it does seem that Elon Musk's vision is that WeChat Pay of China, but that took a very unique confluence of factors. It was in a time where that space wasn't particularly crowded, while China's market was growing in that sector. I believe close to the dawn of the internet as far as how it really began to expand and scale over there. Plus, it had the government's backing because they're like, hey, we can spy on people's social media and their transactions at the same time. This is great. So here, there's a lot more regulation. And the other thing too with Twitter or with X, maybe I'm different, but do you guys know a lot of people from real life that you have on your Twitter feed? I don't.
No, not really. No.
Versus Facebook, I'm not on Instagram at all. Facebook, it's almost all people I know in real life. Very, very few people that I know otherwise. So with MetaPay, like if any sort of social media in the West was going to work as far as a payment system, it would have been MetaPay. Even though I do not like Mark Zuckerberg at all, it should have worked. It would have worked. You have a much larger network of people that actually know each other. Now, I know that there are different demographics on that, but Instagram even.
Yeah.
But we just don't see that with MetaPay. I've heard it's been used with good success on the Quest 3, but other than just a niche application, I think that it's going to be difficult for people to actually see the value proposition there. So
look, guys, at the end of the day, I think my thesis is really simple. The payment network is as strong as the platform that it's on, period. The only reason I would use payments over Facebook is if I'm buying something on Facebook Marketplace. The only reason I would use payments on X is if I'm receiving a payment for a donation or whatever on X, or paying someone a donation or something on X. In other words, the platform itself is dictating me to use that payment network that's built on top of that platform. I think the only exception to that from a peer-to-peer perspective would be Apple. Like if something is on my device, I don't follow people I know in real life on X. I try to keep it separate. But I think content creators would be like a very skewed niche type of person for you to have as a demographic, Roy. Because for me, I go on X just to get news and to interact with other interest areas that I have. I don't have any other social medias in terms of where I interact with people in my regular everyday life. But I do have a lot of contacts on my phone. And I feel like with my Apple device, it makes it so easy for me to just transfer money, from an Apple Pay perspective. Or if I have if Roy and I settle a bet or whatever, I can send him money through my Apple device. That's the only way that I could see it working, as opposed to any one of these social media, quote unquote, social media platforms themselves, unless I am using a service that is on that social media platform.
Sure. Yeah. Yep.
This is what I'm saying. There's no loyalty to this because the switching costs there is no switching cost.
Yeah. And that is what I think really is the true multiple for the Visas and the Mastercards, is that most times wherever you're running to, you're spending from their service. So, it's pretty sticky moat. That's always been the one thing that I never quite understood. And I haven't done a lot of due diligence into it, but why there isn't more competitors in the scheme side of the payment space, right? Like if Discover can get in there and create their own service, then I would think that there'd be, more players, but there's really not. But who knows? Who knows? There was actually one thing that Toby Lucky said during his call with Chamath Palihapitiya on the All In podcast, was that he believes that there will be more payment players, especially on the credit side and on the scheme side. So
I don't see it.
maybe.
I mean, look, I could be wrong, but Visa, Mastercard, Amex, they are so trusted. And when you think about their consumer protection, it would take a lot. Speaking for me, it would take a lot to get me to switch from my current credit card company. A lot. Never had an issue with them. I mean, I don't know.
This was a fun little thing that kind of happened this week. Just going back to SoFi really quick, because I wanted to talk about this. There was a prominent person on X that was talking about the idea, and I'm pretty sure, just to be clear, that they do have a short position on SoFi, talking about how they believe that there's a good chance that SoFi is fudging their account numbers, and that the accounts that SoFi are reporting aren't real people, and that they're paying people, or they're paying bots to create X accounts to promote, SoFi as an investment, these sorts of things. Doesn't name anyone that's shown their face. At one point, they did allege that maybe data-driven investing was a bot, until people told them that, that this is a person named Chris. But anyway, what do you guys think about the possibilities that SoFi could be fudging their numbers?
I mean, they'd be a lot more profitable if they were. Like already, I mean.
Yeah, if you're going to fudge numbers, you're not fudging it this way. I mean, come on.
Yeah.
Well, the funniest
Seriously,
thing
who
was
said this?
the example that they used. They like screenshotted SoFi Girl or something. I've never heard of them. They have 23 followers. 23, not 2,300, not 23,000. 20.
They're probably a bot.
I mean, they could be a bot, but I mean,
no, the 23 followers was not the person that called out.
Who
SoFi.
was
This is some
Was it
CEO
Ram?
of some wealth company that called him out.
Can you bring it up? I have no idea what we're talking about.
I'll see if I can find it. It was on X. Bear with me a moment.
Yeah, well, while you're looking for that though, it was just so I'm a Palantir shareholder, and we saw like around the NHS stuff, just this flurry of bot activities, just basically saying the same thing, spamming it. They were pretty good bots. They did their job. They got the message out and everything. If SoFi is paying bots, they're paying the wrong people. I don't know. Like, these people don't know how bots work or something, because they seldomly post. They have very few followers. It's not very engaging what they actually put. So there's absolutely zero credibility. In fact, it reminded me at the time when I saw this post of what was said about NVIDIA 2 quarters ago when they had just a sterling, amazing beat. People were in disbelief to the point where some speculated that there was fraud involved. They didn't use the F word, but they insinuated. Next quarter, NVIDIA posted similar beat, and they used the F word again, that there's maybe fraud or misinterpreting data or misleading some different things. And look at NVIDIA right now. There is no doubt, and a lot of the FUD that was spread has just been incinerated. I don't have an NVIDIA position, unlike one of you guys, maybe a couple of you guys. You know that your company is executing well when the only way that people can handle the numbers, if they're on the bear side, is just fraud. That's all they got.
I mean, quite honestly, that's a pretty lofty statement to make without having any evidence that a company is committing fraud, especially a company that is overseen by some very stringent regulators.
Look, guys, we have several hundred people watching live right now. I'm really reluctant to give people like this a platform and a lot of airtime. I'm serious. It's like,
who cares?
Really, fraud is what we're talking about. Of all the things 2 weeks out of earnings, we're talking about fraud.
What would you prefer to talk about, Tevis?
I mean,
I
we could,
want to know who said this. I've never said.
I brought up the name. His name's Ram. He's on. He's got like 34,000 followers.
So is
I'm
he
not
in
worried
the
about. It's no one's going to sell their shares because someone doesn't believe that earnings that you have to show government photo ID, and that people can create fan accounts talking about a stock that they like. That equals that SoFi is paying them off.
I mean, look,
We
the
own a
bottom
SoFi
line.
Weekly. I haven't received any checks from SoFi. Have you guys? Have you guys been receiving checks to talk about this investment?
Yeah, lots. No, just kidding.
The bottom line is what SoFi generates with numbers and what they submit to the SEC. And if they're profitable, they're profitable. Period. People can speculate whatever they want. I mean, that's all there is to it. Speculation. I'm sure people speculate about Tesla when Tesla went up too.
Well,
Yeah, it's almost like he has a short position and
hopefully has a short position.
Yeah, so
whatever.
Well, so here's the other thing that he's missing is, yeah, it seems weird to people, and he's in the finance committee, so he should know this, but or finance side of Twitter. But people that are not in finance at all, they're not invested, they may not be aware of it, but it's like people can fall in love with a stock. I know people say, hey, don't ever fall in love with your investments. I'm sorry, Palantir, I'm in love with. I love that company.
Same here.
So PayPal, I'm not quite there yet, but we'll see if Alex Chris executes. He's my twin anyway, so you know what? We'll go with that.
Side by side photos, it's unbelievable.
He looks a lot like my brother, I'm telling you. But
and you look a lot like your brother.
I do. Yeah, that's amazing how that works. But there was just recently, and you'll have to remind me of the name of this, but with the GameStop and AMC saga with Robinhood, there's some movie that came out. I have not seen it yet. I want to see that. What is it?
Dumb Money.
Dumb Money. Yes. People fell in love with those stocks, regardless of fundamentals. I don't know about you guys. I actually made bank off AMC. It's still my largest investment, which is just silly. But I rode the wave. I sold. I was one of those sellouts and losers, and there was that strong cult presence. You also see that even still in Tesla. And of course, there's fundamentals to actually back it up. I would say Palantir is a cult stock. And I think Tevis, you would probably agree that there's a little bit cult in that stock.
Huge.
You can say no comment too.
I'll say it as a shareholder from the day of its direct listing. Huge cult. But I'll tell you this. I'm going to go on record that unless something seriously happens where I absolutely need the money, I will be a Palantir shareholder in one way or another until I die. Period.
I might sell some. I will sell some at some point. But
I align with them more than probably any other company.
I love them. I just do.
I've seen several. Throughout time over the past year or so, I've seen several little flare-ups of people in the FinTwit community crying wolf with regards to SoFi and fraud, and almost always, and I don't know this latest instance, but almost always it's a confusion around their accounting methods, around the held for sale, held for maturity, around the fair value accounting. Like it's a confusion around how they report numbers, less so around like them flat out lying about the numbers.
The problem is it came from Ram, who was not. He's no dummy, to be honest. I think that he got to a point similarly that Chris Patel did before he got bullish on SoFi, where he brought up a good point, a red flag, didn't like it, and then started looking for anything and got lost in the weeds, right? Trying to look for red flags where there were none. And Ram did the same thing. He brought up a really, really great point on a securitization issue and kind of not rose to fame, but got a big spotlight from the SoFi community because he knew a lot of information about their securitization process than anyone else did, right? He does come from a real banking background. Now he's just getting completely lost in the weeds going, is it possible that you can gain 700,000 accounts? Are they paying off bot? And then you just lose all credibility. But I think that more quarters just have to come out and you just have to continuously see the numbers. You have to trust the numbers. They not only are they regulated by the SEC, but they're also a fully chartered bank. They're regulated more than most securities on the entire exchange. And if you can't trust the OCC, the SEC, the Fed, and all of these ones, it's probably best you just jump out of the stock market, because you got a lot of mistrust in your heart, and it's hard to find securities if you're not going to trust a bank.
Honestly, in that case, like, you know, when you get to that point, I'm kind of happy if you have a short position, like, please post a screenshot of your short position. I'd love to see it, because a lot of times people bear a lot of these arguments that really have no teeth. And I mean, we just had this, man, with a KBW analyst. Like, they say, oh, well, this is my argument as to why the stock should go down. And literally 2 days later on the SoFi Weekly podcast, we deconstruct a lot of those arguments and find out that they're just FUD, but the damage is done on the stock. And so there's no repercussions for a lot of these people to say whatever the hell they want to say on X and have material impacts on the stock. Now, you could say on one side that is a weakness of the stock, that it can be so easily influenced. But at the same time, like, if you have a counter argument, you're more than entitled to it. But I just take it a little bit more seriously if you have some skin in the game, you know?
Well, look, you can not like a stock. You can think it's overvalued. It may not be the right investment for you. Think it's a horrible company. Fine, no problem. But to call fraud without proof, there's an issue there. And I do believe, is this the guy that has the CFA or, I mean, did he actually say the word fraud?
If you here, I can
just bring it up on the screen.
Yeah.
Like,
Bear
if
with
you
me.
have a
I can't find the
CFA
exact thing,
charter
'cause-
and you're saying fraud on a public square without proof, there's an issue there.
So
And look, I don't know if there is fraud or there isn't fraud. I have no clue. But if you don't have proof, you can say SoFi is overvalued, no problem. That's an opinion. But to say, if he said that there's fraud without having proof, that's a problem.
He said social media stock price promotion is also illegal. You presume compliance. And Chris Hager responded and said, yes, I do believe that SoFi is not committing fraud or engaging in illegal activities. Not complying with know your customer would constitute an illegal activity. And he kind of went quiet after that. It's I hopefully he even realized. I think it's confirmation bias, and bulls can do it too, where you see every single little thing. It's like, oh, it's bullish. Like X payments coming out, I think it's kind of a nothing burger. But if somebody in PayPal is like, hey, this is bullish for PayPal, it's like, no, it's not. It's at best, it's nothing. Could be something. Who knows? But he's doing exactly the same thing. He's looking at these social media accounts. He's pulling these other things up. He's failing to also see that SoFi is nearly, not quite, but nearly a nearly a cult stock.
Celsius too?
I'm pretty sure he's talking about Celsius, the crypto venture.
Like,
I have a no
drinking
specific
that,
false
man.
and deceptive practices. Now SoFi. Just going through all these accounts of people who just like posting SoFi content. A lot of the people who are, like this, look how early this account was made amongst all these other positions. JPM. It just seems like someone who likes talking stocks.
3 followers too. I mean, you got to watch out for that stock pumper.
Right. Or it's just a new account, as if there's not new accounts that can come online.
Literally, their name is invest at your own risk.
So I couldn't find that original thing because I think there was some little fight at some point where Chris actually ended up like blocking him or something. It was good. I like having both sides. I think IP banking research and these sorts of people see you. There's a couple Twitter accounts that really are not super fans of SoFi that do put up good points on the company that I think are great to listen to. But even like IP banking research, for example, just put out a Seeking Alpha article talking about how they are done shorting the stock. They believe that the growth has been a little bit too impressive lately, and they might even become bullish if the tech platform can prove that there is a valuation multiple that is, worth it for SoFi. But they want to see that.
Now he's converted. I mean, look, man, if you want to have a bear case for the stock, just look at the fucking stock price. It just goes up and down and up and down and up and down. And like, I feel like that's the demoralizing thing for a lot of these investors. I mean, for us, it doesn't matter because we were investing when this thing was at $4, and we're sort of more long time horizon. But my point is like you'll have so many different things that are legitimate things that, I mean, any one of us I feel like on this pod, just by consequence of having done this pod for quite a while, can find you some more legitimate bear cases than a lot of the stuff that you'll see online. Or it'll be macro driven stuff that, is out of SoFi's control and will affect the entire sector as a whole.
Anything else on that you guys want to cover? We're right at an hour.
I'll just say, I don't think SoFi is a cult stock, but I think what Ram is saying is that it's on the cusp of that. So there's a lot of people that are passionate about this stock beyond just a normal investment. And for some, it's a bank and everything too. They've got the relationship there. That's well done with SoFi. They're executing, I think, on all cylinders. I don't think they're paying anybody. That would be ridiculous and silly. But it's a good thing to be in a cult stock. I'll say that. Usually, as long as they're executing. And SoFi, that's all they do. That's why I think some bears are actually starting to back off. If you look at the valuation, 7s for SoFi isn't quite 50s for PayPal, but it's close. It's like, maybe you have a legitimate bear case and a concern about the valuation when it's above 10, like before this earnings, I think after, no question. Like PayPal is, but when it was on 100, like, maybe it's not ideal at 100, perfect valuation. There's issues and concerns, but this low, what's the risk?
Right.
Is it fraud really that they're paying bots, that they're not going to be gap profitable after saying it? Like, I don't know how many times Chris Hager said, but
7.
There's no bear case. There is, but it's so weak right now.
The bear case is if they don't hit profitability, this thing's either going to sell at book value or tangible book value. And that's either 528 or 342 or whatever the numbers change to with the new earnings. But, there is certainly a bear case and there's certainly risk. If for some reason they don't become gap profitable in 2 weeks for the Q4, I mean, they've been toting that so much. They don't hit that. This thing's selling off hard.
Yeah. And Alpha is found when you have a company that's executing on all cylinders, that is growing very well, that has really good leadership in place, and yet the stock price keeps falling. It is frustrating. I've been in those stocks, but at some point, the market wakes up and says, okay, this no longer makes sense. And the stock gets to where...
look at Meta. Yeah. Meta at 98 made no sense.
Palantir at 5.5?
Well, there is the reason why profitability, and just to wrap it up on this, but the reason why profitability is so important, and we've been talking about it for so long, and management has been talking about it for so long, there are literally numbers of funds and large institutions who physically can't buy SoFi because they are not profitable. And so once they become profitable and they guide for profitability, not only are they eligible for indexes where all the big boy money is, but they're also eligible for a lot of these institutions to start loading up and for that percentage of institutional ownership to go up. And what happens when those guys invest? The stock price will follow. And this is why you as a retail investor have alpha at this moment, because you can invest on the forward expectation that, hey, they are just around the corner going to become profitable. Whereas a lot of these bigger institutions, they can't do that. They need the confirmation, and maybe they need the confirmation for several quarters, and then they can start doing that because they're playing with pension funds. They're playing with, large sums of money. And that's where, this is the whole Peter Lynch idea, right? That's where the retail investor will always have an advantage over these large institutions, is because the retail investor can place concentrated, risky bets, quote unquote, risky in unprofitable companies. Whereas institutions, a lot of the time, they want to wait for that confirmation of profitability.
Let me see if I can quickly bring up a quote from Anthony Noto.
Also, I just wanted to bring up Alberto's comment saying that, hold on, let me find it. Give us a 29th SoFi prediction. Probably next episode, next Friday, will be just earnings predictions. By that time, we'll probably also have the SoFi Bank numbers released ahead of time, because they're usually released anywhere between 48 hours before the actual earnings. So on Friday is going to be all around, what can we expect for Monday morning for us?
So Stephen actually wrote an article on this a little while ago, back in May of 2023. But it was mainly based on this Anthony Noto quote. So, 5 years from now, I'd be really disappointed if we hadn't added a significant number of members. We reported last quarter at just over 5 million. If we started adding, 1 million a quarter in the next couple of years, we could easily be in the 20 million plus member range. I would hope that we would have at least 2 products per member, and that means some would have 4 and some would have 1. And I would hope that we would be well into the top 10 financial institutions as it relates to banks from a scale of market cap, as well as other measures that people rank banks. Well into the top 10 financial institutions, meaning banks, in terms of market cap, places them about a $50 billion market cap in what they're saying is over the next 5 years. $1 million a quarter in the next couple of years, we'd be at 20 million. Anyway, I just wanted to read that off. Management is not shy of being, extremely bullish, but who knows? Whenever you're fudging the numbers, you can put whatever number you want. So, hey, we'll be there pretty quick.
And look, fraud does happen. Look at, what was it, WorldCom and Enron? I mean,
Enron.
look, fraud does happen.
CCP.
Definitely happens. Oh, don't start with that. Don't start with that. I'm a Baba shareholder. Don't start with
Shall we wrap and do the members only?
Yeah, let's do that.
All right. Talk to you guys later. Bye now.
Thanks, everybody.